Interest rates have been climbing and then they've been dropping and then they've been climbing again and then dropping. And some people are just simply frozen about the decision whether to buy a home. Well, joining me now with some very good news is Ben Ramirez. He is the branch manager of Sunstreet Mortgage in Tucson. Nice to see you,
Nice
Ben.
to see you too.
Okay, so some good news. You call the 3-2-1. And basically what this does is, what does it matter what the rate does right now? Tell us about it.
So we actually have two. We have the 3-2-1 buy down, and we also have the 2-1 buy down. So the 3-2-1 buy down drops your interest rate by 3% for the first year. Second year, it adjusts 1% higher. Third year, another 1% higher. And then the fourth year goes back to whatever current market rate was at that time.
You're saying that you take 3 points off of that for the first year?
Correct.
4.5% potentially?
Correct.
And then 1% the next?
Yep.
One more the next?
Correct.
But it'll never exceed what the original amount was?
That's true.
Wow. And how do you possibly buy something like that? How do you get that?
So we can have the seller pay that. For the 3-2-1 buy down, it's typically 2.6%. The 2-1 buy down is 2.2% cost to the seller.
Okay, so you have to actually ask the seller. This is something that you put into your loan contract.
Correct. When negotiating for your offer, your agent can ask, seller concessions to cover these fees.
Okay, and on the 2-1, explain that one as well.
So the 2-1, it would drop 2% the first year, and then the second year it would move up by 1%. So let's say 7% is the rate today. First year, your payment would be 5%. Second year would be 6%, and then third year it would go back to market rate at 7%.
Okay, well, let's say hypothetically somewhere in the first year or two, the rates go back down, and now they're getting lower and lower. Yeah. What do you do then?
Well, the great news is there's no prepayment penalty, so you can refinance out of this. And if you refinance early before you're back to the market rate of your original rate lock, you still have some credit left of discount points that you can apply towards your refinance. So it's prorated, whatever that seller paid, you can use those discount points again to get a permanent rate buy down on your next loan when rates are lower.
Ben, this is a fantastic product. Okay, wonderful. Thank you for this information.
You're very welcome.